creating cash flow in production and can grow organically. So those are my areas that I'm most optimistic about. That said, however, we've had a bloodbath in the junior sector in general, and I believe that there will be a lot of huge winners that are exploration companies, but I think you have to be very, very careful about who you pick on the exploration side, because I like to say that this is the best of times, it's also the worst of times for this sector, for the gold mining sector. The gold mining companies that can produce cash flow, can grow organically, they have their own funding, they have the ability to fund themselves, will be okay. And in fact, I think they're going to do extremely well, because there's a lot of juniors that have had their stock prices decimated. They can't raise capital, and they're going to have to give up the ghost, so to speak. They're going to have to go out of business. A lot of these companies will. And the guys that can survive will be in the catbird seat to pick up assets, because a lot of these companies have spent millions of dollars generating data that's very valuable data. So there are companies on the exploration side and the companies that are producing gold that will be able to, they'll be the predators. They'll be able to come along and buy these companies, I think, and provide extremely good returns for their shareholders.
Now, what do you think about the overall sentiment in the junior industry? I mean, you talked to a lot of these people. Do you think we've hit a bottom? I mean, are some of the, I'll give you an example real quick. When I was at the San Francisco Hard Asset Show a few months ago, even the IR people were kind of throwing in the towel. Are you seeing the same thing?
You know, I think that's a very good observation. If you talk to really smart investors, well, take Rick Rule, for example. Rick is licking his chops at this market. He loves this kind of a market because he senses we are at a bottom. And, you know, I'm not the best judge of this. I think actually in many ways, if you watch what I do, you might want to go the opposite way, because I'm a longer-term investor. I take a longer-term view. I like a Brazil Resources for the longer term. And so, but as guys that are really have had extremely good track records in the past, they're looking at markets like this. Now, you have to be very careful, because, again, unless this junior market really snaps back in a major way, there's going to be a lot of casualties out there among those companies that are selling at 10 cents or less. I mean, they just won't be around. A lot of them won't be able to raise capital to put the next drill holes down. But I think we may be looking back at this point in time and saying it was one of those woulda, coulda, shoulda moments when we should have started to take some of the cash that we have in our accounts and use it to buy up some of these things. And but again, I look at the fundamentals. I look at the management. I want to have a company that I know can survive if we don't get that big bounce back. A company that can not only survive but also thrive.
Now let's talk about gold, because oftentimes some of the explorers, it's kind of funny, maybe they haven't discovered gold, but a lot of times the explorers get the most attention during a time when gold's rallying. For gold bullion this year, for 2013, this is kind of making an assumption that we will kind of dip deeper into a new recession. So please, give us your input if you don't agree with that. But will gold respond well in a new recession, or are we likely to see some type of fiscal crisis because of the debt ceiling negotiations over the next 60 days?
You know, that's a very good question, and I would rather look at what the real price of gold is rather than the nominal price of gold. I mean, I think we could see, if we go into a recession, and I think that's a very good possibility. In fact, I would probably think it's better than 50-50 that we do. If we go into a recession, how will gold respond? It could actually go up very significantly in nominal terms for a host of reasons. First of all, I think that the gold markets are to an extent manipulated. I think that there is a lot of paper games that are played in the futures markets to hold the price of gold down. Now, those major banks that might be involved with that, the bullion banks that are speculated to be involved with some of that kind of behavior, they can't keep the gold price down forever, but within limits they can suppress it. And especially in the silver markets, there's talk that we could see an explosion to the upside, because there just isn't enough silver out there to meet the demands if the paper market, people want to take delivery. And I think the same thing is true in the gold markets. Although in the gold markets there are major banks that still have, huge banks that have gold, but the Eastern like countries like China and Russia, and those countries are really trying to increase their hoard of gold in their monetary system or in their central banks. So we could see a major rise in the gold price this year, even if we go into recession, especially if Mr. Bernanke does what I expect he will continue to do, and that is to continue to print money. By the way, it's not just Bernanke, but the Japanese now are printing like mad, or are expected to. So the whole world is printing money, and so I think in nominal terms, gold could go up even if we go into a recession. But more importantly, what I like to look at is the real price of gold. And since the Lehman Brothers decline, when this credit market problems really came to light, the deleveraging process started. I think it's in its infancy at this point in time, but since it started, the real price of gold, and I measure it against the Rogers Raw Materials Fund, has risen very dramatically. It was about an ounce of gold would have purchased about 17% of the fund in July of 2008. It went up to 44% by March of 2009, and it has risen as high as 49.5%. It's about 44, 45% right now. The point is that gold relative to copper and energy, food items and clothing items has gone up very dramatically in this deflationary event of a credit contraction. And with that, we've seen the major mining company profits surge very, very to much higher levels. Now, the mining companies' share prices have not responded to that, and I think the reason is because, we see the Goldman Sachs of this world, the guys that really are in the paper market more than in the hard money market, they're predicting that 2013 will be the peak for gold, and then it goes down. So I think the longer-term view of a lot of the establishment is that the gold price is near its peak, and that we're going to get, happy times will come again for the paper producers. I don't buy that one, but I think that explains why the shares haven't responded as well as they might have otherwise be expected to. I think that we are in a long-term bull market for gold and silver, because I think that we're not anywhere near fixing the fiscal problems and the monetary problems that have risen over many decades of let's say, fiscal promiscuity.
In closing, Jay, for 2013, are we going to see $2,000 gold? I've heard this so many times every year, and do you think the catalysts in 2013 are there for us to finally see gold break through 2,000 and maybe even kind of just start running, in some type of dollar crisis?
Oh, absolutely. The potential is there for $2,000 gold this year, or much, much higher. It's a really difficult thing to predict because it has everything to do with confidence. And if you can tell me when confidence will be, completely snapped, and nobody watches CNBC anymore because they know it's just all bull, but that's not the majority of Americans. Still believe what they're told. When that day comes and when they lose confidence, then I think all bets are off. And we could cut through $2,000 gold like a hot knife through butter. It could be just so simple and so fast, because the demand, the amount of monetary units out there to buy real money, it's growing exponentially. And so I think the price of gold and silver have the potential to grow exponentially as well.
Jay Taylor of miningstocks.com, thank you so much for being with us today.
Well, thank you so much for having me.